In this lecture, we're going to focus on profitability, and I think as managers, we all understand that to some degree we have to have an understanding of what that means to be profitable. It's an important part of making management decisions, and what we call sustainability, meaning the ability to be around for the long haul. We need to know our profitability. So let's go ahead and look at the income statement, because that's the statement that's going to tell us the profitability. So income statement takes the sales revenue, right? Sales meaning what we sold, and that revenue from those sales, we subtract the cost of goods sold, and we get gross profit. Then from there, we take away our operating expenses like marketing expenses, customer service expenses, things like that that are needed but are not in the goods that we sold, and we get the operating income. And that's going to help us to begin to understand profitability as managers. So we're going to look at the three different businesses, right? So we have the service business, we have the merchandising, and the manufacturing business. So what if we're a service business? A service organization, a pure service organization, like for example someone who maybe paints houses, they're just selling the service of painting the house. They don't have any goods sold. So that makes it easy. A pure service business looks like this on the income statement. We take sales minus operating expenses and we get operating income. So that's a service business for you if it's a pure service. What if you're a merchandiser? Well, a merchandiser, they don't make the goods, they sell things that are already made. The cost of the goods sold needs to be determined. So how much did the cost of the goods we ended up selling to the customers cost us? So to do a cost of goods sold schedule, we need to know how much of the goods that we bought from the manufacturer ended up being sold. So we look at the balance sheet. The balance sheet tells us a value of the business. And so one of the valuable things of a merchandiser is the inventory they have. So what we need to know is the value of the inventory on the balance sheet. Now we need to know the beginning inventory and the ending inventory. So if we look at the balance sheet at the beginning of the year, and then we'll look at the balance sheet at the end of the year. Here's our business. Let's say we're a skateboard business. We have a retail shop where we sell skateboards to people. We have inventory at the beginning of the year of $1,000. And then we have inventory at the end of the year of skateboards that we have in our shop. Like these are the skateboards on our shelves of $500. So if we want to do a cost of goods sold schedule, if we took the beginning inventory, 1,000, and we compared it to the ending inventory of 500, we might say, well, that's going to help us to get our cost of goods sold. But we can't do that. We can't just take 1,000 minus 500 and get that as our cost of goods sold, because what if we purchased inventory? Let's say we purchased $10,000 worth of skateboard inventory. Then we had cost of goods available to sell, right? And that would be $11,000 worth of skateboards that we had available to sell. Well, we didn't sell them all. We ended with $500 worth of skateboards. So if we were to subtract that, because we didn't sell it, if it's ending inventory, it's still there, then we have $10,500 worth of skateboards that we sold, and that's our cost of goods sold for a merchandiser. And it goes right here. So it goes from here into this schedule, and we can figure out the profitability. Now things get a little trickier when you're looking at a manufacturer. Let's say we manufacture skateboards instead. Well, if we manufacture skateboards, we have three types of inventory. We don't just have the finished goods inventory, the skateboards that are ready. We also have raw material, that's one inventory, and we have work in process, some skateboards we're working on, and we have the skateboards that we finish and we're ready to send to the skateboard shops that want them. Those are called finished goods. We have three inventories. So we're going to have raw materials, the wheels, the decking that we would have, the stickers, the bearings for the wheels. Those would all be raw material. We're going to put those together, and while we're putting it together, it's work in process, and then when we finish it, it's called finished goods. So when we're looking at this from the standpoint of doing this calculation, we need to know all three of those. So let's say at the beginning of the year, we have some skateboards that we're working on valued at $2,000. Work in process at the end of the year, skateboards that we didn't finish at the end of the year worth $5,000. And then we have the finished goods, $6,000 and $8,000. Now for the raw material, we started out with the raw material, and it was valued at $9,000, And at the end of the year, if we look on our balance sheet, we see that our ending raw material was $22,000. These are all dollar amounts. So the beginning inventory would be the finished goods we had to start with. So that would be $6,000. And then purchases. Well, we don't make purchases of skateboards, we build them. So we're going to have to instead change that to cost of goods manufactured. That's going to be, what we're going to use instead of purchasing. We're going to manufacture them, and that will give us cost of goods available. And our ending inventory is the finished goods we had at the end of the year. So we have that information. The balance sheet tells us the value of the inventory at the beginning of the year. It tells us the value at the end of the year. So we need to get this information to create this cost of goods sold schedule. But to do the cost of goods manufactured, so let's go over here and do another schedule called the cost of goods manufactured schedule. So with the cost of goods manufactured, we need to know the three costs that go into manufacturing: direct materials, direct labor, and manufacturing overhead. We want to know the direct materials that we used in the skateboards, not what we had left over in raw material, but the direct materials we used. Now just note that at some points we use direct materials on some of these schedules, and sometimes we call it raw material. It's the same thing for our purposes. Direct materials used. For now I'm going to tell you that, and then we're going to look at how to calculate it in a little while. So direct materials used is $14,000. And then the direct labor, so this would come from the payroll, and we have $19,000 in payroll. And now we get to the manufacturing overhead. So we would have to know what our manufacturing overhead is. So this would be anything that happens in the factory that's not direct material, direct labor, right? Not period costs, but product costs that are in the factory that are not direct material, direct labor. For example, it would be insurance on the factory, depreciation on factory equipment, rent of factory building. Those are the kinds of things that would be manufacturing overhead. Let's say these total to $12,000. This gives us a good start on understanding what the cost of goods manufactured are. However, we're missing an element here, and that's at the beginning of the year we had some skateboards that we had already started but we hadn't finished. We call that work in process. So what about the skateboards that were work in process at the beginning of the year? And what about the skateboards at the end of the year that were not finished, that were work in process? If they're not finished, they're not manufactured. Manufactured means completely manufactured. So we need to add the work in process at the beginning of the year and take out the work in process at the end of the year since it wasn't finished. So what we'll do is we'll add beginning work in process and we'll subtract. Okay, so what I did was I added the beginning work in process of $2,000, and then I added all of the costs, work in process, materials, labor, manufacturing overhead. That gives me my total manufacturing cost of $47,000, right? So from here down to here gives me $47,000, and this is my ending work in process of $5,000. My total manufacturing costs, beginning work in process plus all those other costs were $47,000. I subtract from that the ending work in process of $5,000, and I get $42,000. And then that is what goes over here in my cost of goods sold. That means I have $48,000 and cost of goods available for sale. My ending inventory is $8,000. That leaves me with $40,000 as my cost of goods sold, and then that will then be pulled over into the income statement. Now, one problem we have is that I just kind of gave you the direct materials used, but we really need to figure out what those are. And so what we need to do with the direct materials used is figure out how much of the raw material was there in the beginning, how much was there at the end, and figure out how much of it was used. So to get this $14,000, let's look at another schedule. So for my direct material use schedule, I'm going to take my beginning raw material and my ending raw material from the balance sheet. So if we go back up to my balance sheets, my beginning and ending balance sheets, my raw material started out as $9,000. At the end of the year, my balance sheet shows that I have raw material of $22,000. So I'll put that in my schedule, beginning raw material 9, ending raw material 22,000. And then we've also purchased some raw material during the year. This is going to have to be given to you, of 27,000. You could actually go to your purchase department and find this out. So if you add up what you started with what you purchased, that means you had, $36,000 worth of material available for use. If you subtract what you ended with, because if you ended with $22,000 of raw material, that means you didn't use it. You want to know what you used. Well, that gives me the 14,000. And that's where I got the 14,000 that we used up here to get the cost of goods manufactured that we used over here, to get the cost of goods sold that we'll use over here. If we had the rest of this information, we could actually come up with a profitability. Okay, we're going to work a problem that will help you on your homework. Right? This is going to be a useful problem for your homework and for your exams. So this problem is 38B, which is very similar to the problem that you were assigned for your homework. As a matter of fact, it's the B set for exercise 26A. So it's the same problem, just with different numbers. So this is the Golden Bay Company. We don't know what they make, but here's the information. So what you need to do, I can't go back, I'm not going to flip back and forth, but this is the information that's given, beginning of the year, end of the year, right, for this information. Raw material, work in process, finished goods. So make sure you have this available in your book. So what you need to do is be able to do these schedules, okay? So the schedules, we can just use them over and over. I'm using Excel, as you can tell. But we can just delete this and just put new numbers in. And it's just that simple. Once you can do one of these, once you set up one problem, you can set up any of them. So we're going to delete it and start out with the cost of goods manufactured. So if you go to the information in the textbook, you'll see the cost of goods manufactured, the beginning work in process, was provided for you at 42,000. Okay, so and then we have the direct materials used. We're going to have to go down and do the schedule for direct materials used. Let's see. The beginning raw material that we had was 25,000, right? It says that we purchased 79,000. That means we had $104,000 worth of material available. If you ever get those numbers, that means you need to stretch your column out, those number signs. The ending raw material is 33,000, right? So that means our direct material used is 71,000. I know I'm going fast, but I think you can follow along or pause it. So then that number comes up and it's the direct material used. So 71,000. Now our direct labor, which is provided in the information, as 84,000. All right, so my manufacturing overhead, now be careful with this one. It's going to be different depending on the company. So every company is going to have slightly different. So you have to go in and you have to determine what is going to be our manufacturing overhead. So to get the manufacturing overhead, you have to come to our expenses that are provided, and you have to look at which of these are the manufacturing overhead, right? So looking at these costs, insurance on the plant, that's going to be in the factory, so that's going to be definitely a cost that we want to include because it's in the factory. Depreciation on the factory equipment, the plant equipment, that's definitely going to be included. Repairs and maintenance, that's going to be included. Marketing is not, that's a period cost. That is not a manufacturing overhead. General and administrative cost, that is not in the factory. That's an administrative cost. Leave these out. So only take the insurance, depreciation, repairs, and then this indirect labor. Remember, indirect labor is another manufacturing overhead cost. So those are the costs you want to take. So I added them to my schedule here. Indirect labor, insurance, depreciation, and repairs. It gives us 71,000. And if we take the work in process, direct materials, direct labor, and the 71,000 overhead, we add those up, we get 268,000. Our ending work in process was given to us, and that was 36,000. Notice it's not negative, it's that we're subtracting. There's a difference. We don't have negative work in process. We have work in process that we're subtracting. And then we have cost of goods sold, which is 232, because we take the 268 minus the 36. And that is going to be used in the cost of goods manufactured schedule, right? So that's going to be the 232 used up here. My beginning inventory was provided in the information. So if we go back and we look at that, we'll see that the beginning inventory for finished goods is 21,000. And so that gives me cost of goods available for sale. 21,000 plus 232 is 253. My ending inventory is provided. We end up with 28,000. That's from the information in the problem. And if we take 253 minus 28, we get 225. And then that information would be used in our income statement. So if you take the same setup, if you learn the setup, you can do any problem that's provided.